Morning, everyone. My name is Giles Gillette. I'm the CEO of New Leaders Foundation. We're a non-profit company that works in the education sector, like all of you. Our primary work is the Data-Driven Districts program. We work with the Department of Basic Education around collecting and visualizing school data from SA SAMS. Some of you may have come across us. And I am a board member of NASCEE. I'm also the treasurer. We're really excited to have this opportunity to provide our members with a 6-week series facilitated by Frida and her team. Give me 1 second. From the Turning Point business, chartered accountants who've been really generous in putting this together for NASCEE and for NASCEE's members. It's a 6-week series. Each session is 90 minutes. Farida and Riza will be putting together a presentation. And today's topic is on compliance and tax updates in the nonprofit sector. So you guys are going to get a chance to hear what's been happening in that space. And once the presentation is completed, there'll be a Q&A session that Farida and Riza will facilitate. So it's really a great opportunity for you to listen to some of the trends and things that are happening in the compliance and tax space, and then to take this time to really push Riza and Farida with as many questions that you may have around this. And we all know how important the governance is in our organizations, and how strong our funders are around making sure that our governance and financial compliance is in place. So yeah, I hope you're able to really make the most of the session. And again, Farida and Riza, thank you so much for putting this on, and we're really excited to kick off the series. I know there are a lot of other topics after this, which you can maybe, Farida, just go through at the end as to what people can make sure they don't miss out in the coming weeks. So guys, welcome from NASCEE. It's fantastic to have you all on the call. And again, Farida and the whole team at Turning Point Chartered Accountants, a really big thank you for agreeing to support this initiative, and we're excited to partner with you guys, not just with this series but with others, and I'm hoping that the NASCEE members get value. Thank you very much, Frida. I'm going to hand over to you.
Okay, good morning, everybody. I'm just going to share my screen. Okay, let me first just thank Giles for giving us this warm welcome this morning. And I would like to personally extend a warm welcome to all of you. Thank you for taking time out of your busy schedules to join us for the very first presentation that we'll be hosting in conjunction with NASCEE. As Giles mentioned, we're going to be hosting a series of webinars or these little videos over the next 6 weeks. Today's session is going to cover some of the more current issues that's around due to COVID-19. And then as the series go on, we're going to be covering issues such as cloud accounting, accounting and compliance matters, income tax exemptions, VAT and Section 18A. I just wanted to maybe just give a little background to myself before we get into the actual presentation itself. So I am a chartered accountant, as is Riza, the other director at Turning Point, and Ridwan Khan. So we all chartered accountants. I'm also a registered auditor. And I personally have been in audit for 17 years now. I was just working it out and I couldn't believe it's been 17 years. And I hope I don't look like I've spent 17 years in audit, but I don't look like that typical gray person that I used to think of when I was studying auditing itself. So yeah, it's been a long time. And I've spent the last 6 years working in the NPO sector itself. So I've built up quite a bit of experience and knowledge about the sector, something that I knew very little about when I first started out. But yeah, it's been a very good learning experience. And like I mentioned earlier, today's session, we're covering some of the COVID-19 relief that's come about, but I'm also going to cover a topic which I think there's a general lack of awareness on. So this, I'm just going to click on, sorry, I'm just having some, okay, there. So this is basically what we're going to be covering today. In terms of questions, we did say that we would be taking questions, but I would prefer taking them at the end. It's just easier for me to manage the process. Riza will collate the questions that have been populated in the chat, and then we will address these as we go along. And just one more thing, if there's any topic or issue that you would like us to cover that we may not be covering in the titles that I've mentioned earlier or in today's session, maybe just pop us an email. Our details will be up at the end, so we can see how best we can assist you. So a little about Turning Point. So as noted earlier, I mean, we're a firm of chartered accountants, and we specialize in the NPO sector itself. Our vision is to continue to be recognized as the leading provider of audit, accounting, and tax services to the NPO sector. Over the course of the last few years, we've developed some innovative value-added services to the NPO sector, one of which is we offer a free needs analysis, which is a simple 2-page document that we send through to organizations. It's sort of like a health check to see where you are, what sort of compliance issues you're lacking on, and then we issue you with a report. So that's one of our services we do offer. And we've established ourselves as one of the leading service providers within the sector. There aren't too many firms that specialize in NPOs, so we pride ourselves on that. And then just at a snapshot of what we offer, I'd like to say that we sort of like a one-stop shop, because we can assist you with pretty much everything relating to your nonprofit. So all the way from incorporating your non-NPO, all the way through to providing accounting services, compliance, tax services, audit and audit-related services. And under the audit-related services, I mean, we cover things such as donor audits, which I know most NPOs have to go through. We do statutory audits, that falls under my ambit because I am the registered auditor within the practice. And we also accredited to perform USAID audits. We also host training seminars and workshops previously or prior to COVID-19, which is the new norm that we're living with. We used to host these across the country. We used to host 2-day workshops, but obviously with COVID, we haven't really traveled, and we've now been we did a few last year where we did online, and we're partnering obviously with organizations like NASCEE to provide our services to the industry out there. Okay, so let me now, one more thing before we get into the nitty-gritties of today's topics. As a service for these presentations that we're going to be doing, we will be offering free consultation to all participants. So basically, after every course that we run, we will offer consultation on an appointment basis. So for this one, we've set aside 2 hours. So on Monday between 10 and 12 p.m. and then on Tuesday between 1:30 and 3:30. So should you want to book a consultation with us, and it doesn't necessarily have to be related to today's topic. It could be maybe you've thought of something else that you want some assistance on or you want some guidance on. So you could just email Riza Amra. His email address is up on screen. It's riza@tpcsa.co.za to book your consult. And please just indicate a brief nature of your consult and your preferred time. And then he will then coordinate between the 3 of us to see who would be the best person to assist. Okay, so that is the free consultation. Okay, and we're going to now go on to today's actual presentation. So we're going to be covering firstly just some of the tax relief that has arisen as a result of COVID-19. There was some relief that was brought about last year for a limited period of time. And then this year, because we've gone with the lockdown that we had earlier, SARS has come out with additional tax relief for their taxpayers. So the first one that we're going to look at is the expansion of ETI. But before I go into what is actually the expansion and what is the new relief that's been offered by SARS, I want to actually just explain briefly what is ETI. In my experience over the last few years in engaging with clients over a wide spectrum, so from your larger NPOs to your smaller community-based organizations, there's often a lack of knowledge of what is available, what NPOs can qualify for. And so I want to take some time to just briefly explain what is ETI. So I apologize for those of you who know what ETI is. You're going to be getting a refresher. But for those of you who are sitting here that may not know what ETI is, I'm just going to explain a little bit about that. So the first part is, what is ETI? So ETI it stands for Employee Tax Incentive. It was a tax incentive scheme that was introduced in 2014. And the aim was to encourage employers to hire young work seekers. And what it enabled employers to do is that over a period of 24 months, you could claim for qualifying employees. Now, I'm going to cover what is a qualifying employee in my next slide. So the next question is, how did employers benefit from the ETI claim? Because remember, we're saying the whole point of it was to encourage people to hire young workers. So ETI enabled an employer to reduce their employee tax payable to SARS on a monthly basis. So every month when you are declaring your PAYE, your SDL, and your UIF to SARS, you've got to pay that over. So if you qualify for ETI or your employees qualify for ETI, you could actually get a reduction on the PAYE that you have to pay to SARS. Now, many people are not aware of this and they've never applied ETI to their business, okay? So that is basically what is ETI and how it benefited you. In terms of the requirements that need to be met to qualify for ETI, this is the requirements that you have. The first one is, it's quite obvious. The employer must be registered with SARS as an employer. And just an important thing to note is for the expanded ETI, you must have been registered by the 25th of June, 2021. The organization must be fully tax compliant in order to claim ETI. I'm going to cover what fully tax compliant means in my next slide. The employee must earn below 6,500. The employee has to be South African, and the employee is not a domestic worker, was hired after the 1st of October 2013, and there's one on here that I didn't put, but the employee must be below 30 years old, so under 29 and under. Okay, so that was the original requirements that you need to meet for claiming ETI itself. So basically, organization is registered, organization is fully compliant. Then from an employee perspective, they under 30, they earn below 6,500, they South African, and they must have been hired after the 1st of October 2013. So what does fully compliant mean? So fully compliant basically means that as an organization, you cannot have any outstanding returns for any taxes. So we're talking income tax, VAT, PAYE, provisional tax, if applicable. You cannot have any outstanding payments to SARS. If your organization is not compliant, so the EMP 201 form, which is where you actually claim your ETI, it doesn't allow for the ETI utilized block to be completed, right? So we're going to cover in the next few slides basically how you claim the ETI on the form. Is ETI applicable to NPOs? Yes, it is. So as long as you meet the criteria to qualify, which we've covered now, it doesn't matter whether you are an NPO or whether you're a PTY limited, that the type of entity doesn't make a difference. So what is the expansion that SARS is allowing? So ordinarily, you get to claim ETI over a period of 24 months. In the first 12 months of the persons that you're claiming for the individual, the maximum claim that you could get per person was 1,000 Rand. And in the second 12 months, the maximum that you could get was 500 Rand per employee. And now with the expanded ETI, what SARS is saying is that, well, for these same people that you're claiming in these 2 years, the 1,000 Rand has been increased up to a maximum of 1,750. And the 500 Rand in your second qualifying month has been increased to 1,250. But this is only for a limited period. So it's only applicable for periods August 2021 to the 30th of November 2021. The second expansion that they've allowed is they now said, okay, well, you may have employees that are between the age of 30 and 65. So they meet the other criteria. They're South African, they're earning below the 6,500, but because of their age, you were never able to claim the ETI. Or you may have people that they are between 18 and 29, but you've already claimed ETI for their 24 months previously, or they were employed before the 1st of October 2013. So what SARS is now saying is that if you have employees that meet these, fall into these categories, you can now claim an additional 750 Rand per employee for the period August, so 1st of August to the 30th of November. So just to reiterate that, basically people who didn't meet the age criteria before, so that was the only factor that they didn't qualify on, you can now claim 750 Rand for these 4 months. People who you had claimed fully for in the past, you can now claim another 4 months at 750 a month for them. And if you had people that were employed before 2013 October, you could also claim for them. They've also accelerated the payment from twice a year to monthly. Okay, so how do you claim the ETI? Well, the ETI process of claiming, that hasn't changed. You still claim it via your EMP 201, which you submit to SARS. So normally when you're doing your payroll and you're completing your EMP 201, you would capture your PAYE liability, your STL liability, and your UIF. So basically you would do that as per normal. You would populate those fields to get your total payroll liability. You would now then have to complete the middle block, which is your ETI calculation. And you'll see there's basically 4 lines in there. ETI brought forward is something that you cannot populate. It rolls forward every month. ETI calculated is the amount that you would put in that you've done based on your payroll calculation. So for the month, you've computed that from all your employees, you're only getting 500 Rand in total. Then your ETI utilized is the amount that you want to now utilize in this return itself. So there are certain limitations. One, it is limited to the ETI that you have available. So in this case, we had no ETI brought forward. We only had ETI calculated of 500 Rand. Therefore, we can only utilize 500. If we had a brought forward balance, say of 1,000 Rand, then we would have been able to utilize 1,500. But there's a further restriction in terms of the amount that you can utilize. It is limited to your PAYE liability. So in my example here, obviously the PAYE liability is quite substantial, so we can claim the full 500 Rand. But if my PAYE liability, for argument's sake, was only, say, 500 Rand, for argument's sake, right? And I only have ETI of 500 Rand, or if let's reduce my PAYE, let's make my PAYE 400, but I've got ETI available of 500. I can only claim 400 Rand because I've only got a PAYE liability of 400 Rand. Okay, so that's basically what the next slide is covering, that you will complete the ETI utilized, and there is a limit on that. Your amounts in the total payable column, that gets automatically adjusted by the ETI utilized. An important thing to remember, it's only the PAYE liability that gets reduced. Your UIF and your skills development is not impacted by ETI at all. Okay, so when is this expanded ETI applicable from? So like I mentioned earlier, it's basically from August to the 30th of November. So your August payroll, your first EMP 201 that you will submit would be in September. Okay. Some of the practical considerations for you, obviously, you need to make sure that you're fully tax compliant. If your organization is not fully tax compliant, or if you don't know if you're fully tax compliant, try to run a tax clearance certificate and see what you're not compliant on, and then obviously see whether you can remedy that easily. I know there's lots of organizations that are not fully tax compliant, and a lot of the times they're not even aware that they're not compliant. Second thing to consider is, will your payroll software perform the calculation based on the latest SARS guidelines? So important thing to make sure is that if you're using an automated payroll system, that then update is released. I know last year when SARS issued the first COVID relief, we were using VIP, the update hadn't come through in the first month. It had come through in subsequent months. So just be aware of those sort of things. If you're doing your payroll manually, ensure that you're using the correct formulas and you're updating it for all the new guidelines. How can TPC assist you? Obviously, for our existing payroll clients, we would do this at no additional charge because it's part of our services. But if you're not one of our clients, we can assist you either with the review of your calculation, or we can perform the calculation for you. If we're just doing a review, we generally charge 100 Rand an employee. But if we're doing the calculation, then we charge a little bit extra. It's 125 Rand an employee. Okay, so that was ETI. If you have any questions on ETI, just put it in the chat, and then we will address that later on at the end. Okay, so the next SARS relief that's come out is SARS PAYE deferral. I'm not going to spend too much time on this purely because it's not relevant to most nonprofits, and I will elaborate on that in the next slides as to why we're saying that. Okay, so what is the deferral? So just if you want to know, and maybe you're involved in other organizations or other companies, basically the deferral that SARS is allowing is that a qualifying taxpayer, and we look at again what is a qualifying taxpayer, can defer 35% of their PAYE payment for the 3-month period 1st of August to the 31st of October 2021. And the deferred amount is repaid in 4 equal installments. Your first installment you'll pay is by the 7th of December, and then your last installment would be by 7th of March 2022. And SARS won't issue any interest and penalties during this period because you're using the deferral. Okay, however, we now have to look at who qualifies for the deferral, right? So what SARS has said is that it's basically a trust, a company, or a partnership that conducts a trade. Now that's where the issue comes in with nonprofits. So you must be conducting a trade. Your gross income must be 100 million Rand or less for the year of assessment ending on or after April 2021, but before April 2022. And your gross income does not include more than 20% of, and they've quoted a whole lot, but essentially it's passive income. And you must be fully tax compliant. Now, the question that comes in is, does an NPO qualify for this? And the answer we were given last year when this relief was first issued is that no, because you do not conduct a trade. Collecting like donations and grants is not deemed to be a trade from SARS. So under the previous COVID-19 relief, which was issued last year in 2020, NPOs didn't qualify for the PAYE deferral. And obviously nothing has changed on that aspect for this with this new relief. And we had made submissions last year to SARS and National Treasury on this, but nothing had come out of it. Okay, so I just wanted to go through this just to make you aware that this is out there. But for NPOs, you really if you're only getting grant and donation income, you're not going to qualify for this. Okay, so the next one we're moving on to is Department of Labor benefits for COVID-19. Okay, so I've also got briefly just some information that's come about. Okay, so the CARES relief was around last year, then it sort of came to an end for a period, and they've now saying, okay, well, they're issuing a new round where you can claim. However, the industries that they're focusing on is your hospitality and tourism industries. Now, from an NPO perspective, the only type of NPO that could possibly fall in to this new round of TERS claims is maybe if you have a museum, because they've listed basically Annexure A and Annexure B, which identifies what sort of entities would qualify for the TERS claim. Nothing has changed in terms of the process of how you would claim or the thresholds that they were applying. So all of that is still the same. The only thing they've now said is that, well, they're opening this up to employees or employers within specific sectors, and it's the hospitality and tourism. So we've basically I'm just highlighting. So if you look at Annex A, I mean, I don't think NPOs would fall into this. The only one that you could possibly fall in is if you have a museum. I do know of some clients that run museums in an NPO. So if you are one of those, you could qualify for the TERS claim. Okay. Then we have the Department of Labor reduced work time benefit. So this is now applicable to employees, but what they've said is that if you are an organization out, so you're not hospitality and tourism, so basically any organization, and because of lockdown and the Disaster Management Act, you know, every time the president comes out and came and introduced different lockdowns, if your organization was affected by that, in the sense that your employees were put on short time or reduced pay, your employees can now claim from the Department of Labor, UIF. As an employer, you can assist them with the submissions of these claims. So I just wanted to alert everybody that this is out there. If you are an organization where you are paying your employees less than they normally earned, or some people weren't even working, you can assist them with claiming from the Department of Labor for them. Okay, matters to consider. So if you are the museum maybe that would qualify for the TERS, just to consider things that obviously you must be submitting complete information. If anybody out there submitted TERS claims last year, you knew that it was like an absolute nightmare in the beginning. Your documents had to be in a specific format. You had to make sure you submitted it on time, and you had to constantly follow up to make sure that your claims were being processed. So matters to consider is obviously, do you have all the information? Is it in the correct format? And make sure you're sticking to timelines. Okay, how can we assist? So if you do have, if you are an organization that fits into Annex A or Annex B, we can review your calculation for you, or we can do your submission for you. So if we're just reviewing, we charge a small rate of 50 Rand an employee. But if we have to do your submission, we charge 1,000 Rand for payroll up to 10 employees. And then we have a rate of 50 Rand per employee levied after that. Okay. Right. So that was the relief that's come about from SARS. So I did mention earlier that I wanted to also talk about a matter that is quite, I think there's a lack of awareness on. Sorry, could Precious just mute herself? I don't know if I can mute her. Okay, thank you. Yes, so the Section 18A audit certificate, this is something that in the last, it's been around for a while, but not many people are aware of it, or and as part of our audit, or as part of audits, you know, with speaking to clients, there's a general lack of awareness on it. So I wanted to just bring this up in today's session and just talk a little bit about it. So if we look at the first question I have is this a new requirement? And the reason I put that up there is, like I said, there's a general lack of awareness. So this isn't a new requirement. It's been around for quite a while. SARS issued an interpretation note in June 2019. So we're now in 2021, and the interpretation note came out in 2019. So it's been at least 2 to 3 years, right? So they issued this interpretation note 112 on 21st of June 2019, addressing the Section 18A audit certificate requirements, right? Now, based on my practical experience and in working with NPOs and working with like just from an accounting perspective or even from an audit perspective, there is a general lack of awareness on this, that a certificate is required in the first place. And those that are aware that a certificate is required, they actually don't understand when it's required or what needs to be done. So we're just going to cover that briefly. So if we look at who is required to obtain a Section 18A audit certificate, so it covers two parts. The first one is basically any approved public benefit organization that carries out a combination of public benefit activities, which as noted in Part 1 and Part 2 of the 9th Schedule of the Act, which basically means that as a PBO, you are conducting both 18A and non-18A activities, okay? So that's one. So basically, if you are a PBO and you're carrying out 18A and non-18A activities, then you are required to have a Section 18A audit certificate done. The next type of PBO that is required to have an audit certificate done is a conduit PBO. So basically, if you are a PBO, you get money and you then donate the money down to other organizations. This is applicable to you. So SAS is saying that, well, a conduit PBO who's providing funds to PBOs, to other PBOs, institutions, boards, or bodies carrying on public benefit activities, as noted in Part 2 of the 9th Schedule of the Act, as well as to PBOs, institutions, bodies, or bodies carrying on public benefit activities in Part 1 of the 9th Schedule, or you giving donations to organizations that are not approved for Section 18A purposes, right? So one, are you an organization that's doing both 18A and non-18A activities? And two, are you a conduit PBO? Okay, so that's who has to have one. I just wanted to cover briefly what's the difference between Part 1 and Part 2 of the 9th Schedule. So the Part 1 basically makes reference to all the public benefit activities. So when you are submitting your application to SAS for PBO status, to get your public benefit organization status, you've got to choose from Part 1 all the different activities that they have to say what public benefit activities you're doing. So Part 1 is quite comprehensive. It's a long list. Then you have Part 2, which is basically, it lists those public benefit activities that qualify for Section 18A. So when you are applying for 18A status, and what that means is 18A is that, I'm just gonna give like a brief intro, because this is something that we will touch on in one of the later series in our webinars. 18A is basically where you are issuing out an 18A certificate to a donor. Okay, so your Part 2 of the 9th Schedule lists only specific activities that qualify for Section 18A. So basically, from your long list in Part 1, only a certain ones make it through into Part 2. Okay, so if we look at the public benefit activities that are excluded from Part 2 of the 9th Schedule, religion, belief, philosophy. So if you are an organization that's doing religious work, or like a church or a mosque or a temple, or if you're doing cultural work or sports, research and consumer rights, then these activities are excluded from Part 2 of the 9th Schedule. Okay. Then what must the Section Audit Certificate state, or the Section 18A Audit Certificate state? So it has to confirm that all the donations that have been received or accrued in the year of assessment, and they've defined year of assessment as your financial year, for which Section 18A receipts were issued, were used solely in the carrying on of public benefit activities in accordance with Part 2 of the 9th Schedule. So basically, it's saying that for every Section 18A certificate that you've issued, right, that money must have been used only on 18A activities. Okay, so that's what it's saying. And it's saying that your certificate needs to certify that all donations received. However, the interpretation note does go on to say that, okay, they do understand that it's not feasible to do 100%. So you can do sort of like a percentage, but they obviously have not specified what percentage can be done. So that's the first part, is what it must say. So that's for an organization that's doing 18A and non-18A. Now you have a conduit PBO. So for a conduit PBO, there's two things that needs to be included in the certificate. The first part is that it must confirm that all the donations received or accrued in the year of assessment for which 18A receipts were issued were used solely to provide funds to other PBOs or bodies, and those funds were used solely for public benefit activities in accordance with Part 2. So basically, it's the same as what you were saying for a normal PBO, right? So a conduit PBO certificate basically needs to confirm the same thing, that if they've issued an 18A receipt, they've now used that money to give it to an organization that carries out activities which is in accordance with Part 2 of the 9th schedule. Now, if you are a conduit PBO, there's an additional part that needs to be included in your certificate. So conduit PBOs, the money that they get, you have to spend it at least 50% within 12 months. So a conduit PBO is allowed to retain some of the funds that it's received, but at least 50% must have been distributed or used within 12 months of receipt. So as part of your certificate, the certificate also has to confirm that the organization will distribute or use 50% of the 18A donations within 12 months. Okay. Who can issue a Section 18A audit certificate? Okay. So the Act doesn't specify from whom an approved organization must get this audit certificate, right? However, in the interpretation note, SARS has recommended that the person issuing the certificate must be independent of the approved organization and suitably qualified. Now that makes sense that they must be independent, because what would be the point if an organization could then do a certificate themselves, right? There's no objectivity there at all. So the independence makes sense, and then suitably qualified. They don't specify what is suitably qualified. However, the interpretation note does state that, like your auditor. So if you're getting an audit done, you could get your auditor to do your 18A audit certificate, because they would be independent and they would be suitably qualified. Okay. Now, then the question becomes, when do you have to submit this 18A audit certificate, right? And this is where I think most people will start thinking, what's the point of this? But the 18A certificate is only submitted to SARS. So you will only submit it once you've filed your annual income tax return to SARS, and SARS requests a copy of it. So that's the only time. So you cannot submit it while doing your tax return. You cannot submit it before that, right? So once you've done your ITE 12I tax return, which is your tax exempt income tax return, and I hope organizations are doing that, because when we first started rolling out training, and we would ask people, okay, so have you filed your tax return? And okay, I'm digressing a little, but my point is that most organizations would say, but we tax exempt. So we don't need to do a tax return. And then we'd say, but no, tax exempt just means that you're tax exempt. You still have an administrative responsibility of filing your income tax return. So it's not the same as a normal company tax return. It's only 2 pages, but it still needs to be filed, and still needs to be filed within the normal timelines of within 12 months of your financial year end. So when you filed your tax return to SARS, and you know, when you file your tax return, if you are an 18A accredited organization, one of the things you have to fill out on the tax return is the total value of 18A certificates that you've issued, as well as the number of 18A certificates that you've issued, right? So that information you populate into your tax return. Now, what SARS is saying is that, well, if after filing your tax return, you are then requested by SARS to submit an 18A audit certificate, then only will you submit it to them, okay? How long should you retain the Section 18A audit certificate? The interpretation note states that it needs to be retained for a period of 5 years from the date of submission of the income tax return. So very important, it's not 5 years from your year end that that you're filing, for example, but because if you are filing old returns, for example, we are in 2021 now, if you are still filing 2015, 2016 returns now, and yes, there are organizations that are way behind like that, where they still have 5 years ago's tax returns that haven't been filed. It's from the date you submit. So if you're submitting a 2016 tax return in 2021, you've got to keep it from 2021, 5 years on. So that's 2026. Okay, so 5 years from the date of submission of the income tax return. Okay, the matters of consideration for you is, one is obviously, do you require an audit certificate? So are you a conduit PBO, or are you a PBO conducting both 18A and non-18A activities? And then the second one, which is probably an important one, is, do you have the required information or processes to provide the auditor with all the information required? So this is a tricky one, because if you think of how your accounting systems are set up, you would normally capture, so all your income gets captured under grant income or donation income or whatever, but you normally have an account that you're putting it in. And then your expenses or the payments that you're making with it, it would go under, you would group them together. So if you are an organization that's doing a whole lot of different activities, so you're doing 18A and non-18A activities, you don't record your expenses in that manner. I mean, I've just done a certificate now, and that was an issue. They had to now extract specific information or try to generate specific information to identify from all their expenditure that they made, what was 18A expenditure and what was not 18A expenditure. Now that information is not readily available from your accounting system unless you are processing in that way. But I've yet to see any organization process their payments in that way, where they're splitting between 18A and non-18A. So it's important that you obviously have all of that information available. For the certificate that I just did now, the client, I had to give them a long list of what is it that we looked for. And they then had to go through their system and then analyze their data and then collate information to provide us with basically the list of the payments that they made for 18A and non-18A activities. And obviously it all had to tie back to their trial balance and their general ledger. I mean, just as a matter of interest, some of the things that we had to verify is if they were saying an organization was an 18A accredited organization, we had to then inspect founding documents for that organization. So look at the PBO letter for that organization. And in this example, I'm talking about a conduit PBO where they were receiving funds and then distributing those funds out to other organizations. So we had to then look at, okay, for all the people that they're saying that they've given this money to, were they conducting 18A activities? Okay, so it was a little bit more work that had to be done, but the client had to set up all of the information and pull out all of the required documentation for us. So that's an important thing for you, is that if you are one of the organizations that's a conduit or you're doing both activities, you need to make sure that you have, or you put in processes now maybe to say, okay, how can we collate information in the best way possible so that should be required to do this audit certificate, the information is readily available. Okay, how can TPC assist you? So as a firm that specializes within the NPO sector, we are suitably qualified. So we meet that requirement. So remember, the first one is that you need to be suitably qualified. Obviously, from an independence perspective, we'd obviously look at to see what services, but generally we don't have any independence issues with any of our clients. So we would be qualified and we are independent. And because we've had prior experience, you know, we're coming with that. So we can assist you in that manner because we've got some experience with issuing these Section 18A audit certificates. Okay, and then yeah, just a reminder again to book your free consults by, you can contact Riza. His email address is up. It's riza@tpcsa.co.za. And then once again, just a reminder, the consult times is Monday from 10 to 12 and then Tuesday from 1:30 to 3:30. When you are sending through your request or your request for a consult, please just include a brief nature of what is it that you want to consult on, and your availability or what time slot that you would want to take. And then we will then get back to you. So Riza is coordinating the whole thing. He will then engage with myself and Ridwan to then let us know, okay, which one of us will be attending on the consult, or it might just be him as well, depending on the nature of your query. Okay, so we did, just a little disclaimer is that, so all the COVID-19 information that we've distributed today it's correct up until today's date. And the reason we put that is that because last year, I think I was losing my mind in the first lockdown when information was changing on a daily basis with SARS and Department of Labor. So obviously an important thing to note is that with all the COVID-19 relief that's coming out, it is a platform that's continuously changing. So be aware of the dates, aware of the timelines, especially things for like the ETI. There's specific months only that you can claim. You don't want to be caught in a situation where you go and you start claiming ETI beyond November 2021 for this expanded ETI. And then when you are submitting your EMP 501, SARS now comes back and rejects those ETI claims for the periods after the expansion period. So just make sure you're fully aware of the timelines that you're working with, the dates, the amounts that you need to be working with. I cannot emphasize how important it is to make sure that your calculations are correct, especially if you're doing things manually, because the ETI calculation, just to go back to that, it's not just a straightforward, okay, you'll get 1,000 Rand or 1,250. It does depend on the person's salary and where they are, because there's a formula that it works with, because it looks up to a maximum of 6.5, but there is certain formulas that SARS has in determining the actual calculation for a specific individual. So you want to make sure that you're not making any errors in that, because when you do submit your EMP 501, SARS does an automatic ETI calculation as well, and they will then tell you whether your ETI is incorrect or not. And if your ETI was incorrect, they will then go and issue a revised assessment against the individual months that you claimed, and then you would then get interest and penalties on those individual months. So just a very important thing is to make sure that you are fully aware of the timelines and the amounts that you need to be working with. And yes, obviously, make sure that if you decide to go and do the ETI, just make sure that SARS hasn't issued any other correspondence after today. I know this morning, Department of Labor issued out new TERS information, but it's only relevant to that specific tourism industry. So just make sure that you are using the latest available information out there, because this platform is constantly changing. It's not static, and you want to make sure you're on the right end of the information that you are using. So we've just put in this disclaimer for that. Okay, so I think I am a little ahead of schedule. But we can open up for questions now, I think. And then I just wanted to say, so if your consult is not necessarily related to today's topic, just let us know, because I know you may not have something specific to today's, but you want to speak to us. So you can engage with us on other topics, not necessarily what has been covered today. And then, yeah, so we can now take our questions. I'm just going to see if Riza has, okay, so we've got some questions. Okay, so the first one is TERS applicable to NPOs offering consultancy services, or if a portion of the income is from trade? So the TERS at the moment, it's only applicable to industries within the tourism and hospitality. So if I just go back to that slide where we've listed way past it now. Okay. So if we look at the industries, so under Annexure A, they're basically looking at these sort of industries. So if you're consulting, because you're saying, the question is that if you're offering consulting services, you would have to be within this sectors. So either Annexure A, where you are host, like your venues, you're a venue-based organization, or Annexure B, where you're like a museum, a gallery, a library, or I mean, it's quite broad, but it's all specifically related to the tourism and hospitality industry. So if you're an NPO just offering normal consultancy services, you wouldn't qualify for TERS under the current one that's available, because you don't fall into these industries. Then a question to clarify the PAY deferral regarding NPOs earning business income as well. So for the NPOs that are earning business income, we'd have to look at what is the percentage of the business income as opposed to the donation income. As it stands, I mean, they're just saying that you need to be conducting a trade. I would need to clarify, like we need to know specifics in terms of what is your total income and what is your business income that you're generating, to see if you could qualify. So for that person who asked that query, maybe you could email us and then we can look into it further for you. Okay. See, Agnes has a hand up.
Hi, Farida. Thanks very much for the informative presentation. I just have a couple of questions. Just a follow-up on what you've just said on the PAYE deferrals. So we do conduct trade and we also do receive donations, but we've sort of planned to claim the deferral. But what I wanted clarity on is, because it says your business has to earn a turnover of 100 million. And
well, it's below, so 100 million or less.
Yes. For your financial year ending, I think after April 2021, yes. But for April 2022. But obviously, yes, because we don't have the actual results as yet, is the assumption that we're going to be using budgets? So if we've budgeted for an income that's above 100 million, we shouldn't claim.
Yeah, I think if you are budgeting above 100 million, you shouldn't, because then you run the risk that your income is going to be above, and then you've taken this deferral, and then SARS will come back with a penalty on it because you don't qualify.
Yeah. Okay, all right, fair enough. Then the other one is on the Section 18A audit certificates.
Yes.
And you did mention that, okay, we submit our returns and we only submit one if SARS requests for it.
Yes.
So we haven't done these Section 18A audits, and I was just wondering, let's say for the year 2019, we did issue Section 18A certificates, we didn't do the audit. Do I need to go back and have those years audited, considering maybe SARS, yes, we finalized that return, SARS is reviewed and is assessed, so it's closed, or I should only go back if SARS hasn't assessed that particular year?
I was just going to ask that question, whether the return has been assessed by SARS. So if the return has been assessed, that means SARS has reviewed everything and there's no further queries, then you wouldn't need to go back and now do an audit for that period, because from SARS perspective, that tax return is closed off. You know, it's resolved. They've issued you with an IT-34, so you shouldn't need to go back to that. I would only look at it for the ones where you either haven't submitted or you haven't been assessed as yet by SARS. That's possibly the ones where you would look at to see, okay, now look at getting the certificate done.
Okay, clear enough. Then the last one is on the conduit PBO. Fine, they haven't, I'm not sure whether you said this section 18A audit is only applicable if an organization has issued section 18A certificates, because this conduit PBO, it hasn't issued any 18A certificates, and it does receive the grants. Also, is there still a requirement to spend that grant within 12 months? I mean, 50% of it, if also I haven't issued a section 18A certificate.
So in terms of the 18A audit certificate requirement, if you're not issuing 18A certificates, then you wouldn't need to do it. Because the whole reason that they came about with this 18A audit certificate was because, so, you know, as an individual, you claim the tax deduction on your 18A, on your tax return. You put in your 18A certificate number and your PBO number that you donated to. So they obviously want to, that's where they're focusing on. So you must have issued 18A certificates for you to be applicable for this audit. So Agnes, for your question, if they haven't issued any 18A, then they shouldn't have to do this audit.
Yeah.
Just check.
Thanks, Farida.
No problem. I'm just checking if Riza's sent me any more questions. No. I don't know if there's any other questions. I'm just going to check on the chat. So Riza has just put on a comment to say that any 18A sort of questions unrelated to the audit certificate will be covered in our 18A presentation that will be done shortly.
Yeah, I think in our last discussion, when we spoke about it in our last meeting, I said we did discuss it, and I did mention, no, it's the service providers who need to change their budgets. I can only adjust the totals, but the other monthly figures, I mean,
sorry, I'm not too sure who's talking.
I wouldn't know where to adjust for them. So I mean, I can work on the totals and adjust the totals, but I mean the individual line items, I
can't see who's talking, but they've obviously got their mic on. Brenda, you can go ahead. I think you got your hand up.
Thank you, Farida, and thank you for this very informative session. I'm wondering whether you have some kind of a pinup thing that you can share with us that has all the dates for submissions for the different things. Yeah, a lot has changed. Yeah, so just like, you know, your EMP, when it's due, that we can always refer to just as a takeaway.
So you're looking at, from a compliance perspective, the various deadlines that you would have. Okay, so we will be covering compliance in our next session, but just to address the question that you're raising now, EMP 201s are due by the 7th of the next month. So if you are doing your August payroll, you need to submit your return and make payment, and it must have cleared before the 7th of September. And another just important thing to note is that you need to look out for when is the 7th. If it's on a weekend, you need to make sure that your payment has cleared before by that Friday. Otherwise, SARS does issue interest and penalties. And we will be covering other compliance matters and deadlines in our, I think it's the 3rd or 4th session that we're doing in the next 6 weeks. So there we will be focusing on like all of the different compliance matters that somebody needs to be on top of, because I do know it is quite a bit. It's very easy to lose track of when things are due. But Brenda, to answer your question, EMP 201s is due by the 7th. So that requirement has not changed. It's been the 7th for a while, and it will continue to be that. Well, for now until SARS makes any changes. But for your purposes, you just need to know 7th of the month. I don't know if there's any other questions. I'm just checking to see if Riza's got anything here for me. There's nothing else there. Yeah, I did see that. I can see in the chat there's quite a few questions around 18A. So we will be covering an entire section on 18A. So if you have questions on that, those will be addressed by our colleague Ridwan. He will be covering 18A and all the aspects that go with it. Okay, okay, so I'm just seeing to see if there's anything that has been missed. Just in terms of the slides for the presentation, it will be shared after this along with the recording itself. It will come from the NASCEE representative. Okay. I'm just checking if there's anything else in here. I think we have covered all the questions. I don't know if anybody else has any specific questions relating to today's topic. If you do, you can just unmute and ask your question. Okay, I'm just seeing there seems to be.
Good morning.
Yes.
Yes, my name is Musa. I'm from VVOE. I have a question. Actually, it's just a personal interest, and I'm not sure if it will be relevant for this platform, talking about tax relief from SARS with employees working from the home situation.
Yes.
I think that employees can be able to claim for some relief in terms of rates, office space, and electricity.
Okay, so it's not part of today's topic, but I will cover it since we do have some time. So SARS issued out an alert stating that for those employees that were working from home, so for your 2021 income tax return, which is the period March 2020 to 28th of Feb 2021, employees could claim home office costs. Previously, that was not available to people who earned a salary. It was only commission earners that could claim that. But you are allowed to claim as an employee if you are working from home. There's certain costs that you can claim. I'll just briefly touch on it, but basically you could claim for the categories of costs. It would be like your rental, or if you own the property, it will be the interest on your bond, your utilities, including your rates, security, your internet, if you've purchased stationery, printing costs and things. So how it works is that you don't get to claim 100% of the costs. What SARS says is that you would have to work out estimated office space. So you've got to have a designated office space in your house. SARS says it can't be that you're using your kitchen table as your office. So they want a designated area that's an office, and you take that square meterage as a percentage of your total square meterage for your home, and you then claim that percentage of the cost. So for example, if your house is 100 square meters and your office is 10 square meters, you can claim 10% of those costs. It comes up on the tax return. You put it as, I think, home office costs. I think there is actually a code available. And you will have to, obviously, if the tax return gets selected for an audit, then the individual will have to supply SARS with their workings and supporting documents, like invoices and things, to show how they've got the amounts that they're using. Okay, so I hope that answers your question. I don't know if there's any other
Yes.
questions.
Farida, can I just come in there with the home office expenses, perhaps?
Yes, Lisa.
Just something to also clarify. SARS are quite particular with these audits on the home office expenses on your personal income tax returns. So please ensure that if you are claiming, you have all of the supporting information available, because in all likelihood, it will trigger an audit.
Yeah.
And to such an extent where SARS even said that, for instance, if you've said, and one of the big areas of concern, and which is something that they perhaps look at going forward, is that that room needs to be regularly and exclusively used for the taxpayers' trade. And apparently it can't, from what our understanding is, that it can't even be shared. Let's just say spouses share workspace, So that's one of the areas that you need to be quite particular about in terms of making that claim, because if it does go under audit, then SARS will want proof that it is regularly and exclusively used for trade. As Farida mentioned, it can't be on your kitchen table. You can't have a workstation set up in your bedroom or anything of that sort. It has to be exclusively. They will, if one of the things that they've perhaps might request will be photographs of the area, and it could even result in a home visit in certain instances, obviously depending on the quantum of the amount, where they want to obviously verify that. So very important to bear that in mind.
I think Riza's touched on a very important thing is, at the moment, I mean, I've done a few tax returns and they are getting selected for audits. You've got to submit all the supporting documentation that you have. If you don't submit the supporting documentation, what SARS will do is they will reject that part of your claim because you haven't substantiated it adequately to them. And then it may result in maybe you going from a refund into a payment. So it just depends on your actual tax return itself. And that goes to, that is applicable for any SARS audit that you have. The burden of proof is on the taxpayer. So for any return, whether you're doing a VAT return or EMP 501s, which we've seen now in the last, this year was the first time. I mean, we've been doing 501 submissions for clients for the last 6 years. And I've seen that, they don't generally audit EMP 501s. This year, we had a record where every EMP 501 that we submitted got selected for an audit. And I think it was because of ETI relief, all the COVID relief that came out last year. SARS is obviously auditing all of that. So you've got to send them supporting documentation. So when you get that alert or a message to say that SARS has issued correspondence, please make sure you check it and you action it, because if you don't send them the information, they assume that it doesn't exist, and then it could have an impact on your return, and as well as interest and penalties being levied. So just be aware of that.
Okay, thanks a lot, Farida. The reason why I was asking this question also is that, with the lockdown and this COVID-19 situation, we don't know what to expect. Everything is, so up in the air. People don't know how long they'll have to work at home. So I was thinking that maybe it's something that NPO employers can think about in terms of the rest of the employees if they have to work at home for longer periods. But thank you very much for your responses. Thank you.
I don't know if there's any other questions.
Farida, I think there are a few in the chat for you.
Okay, let me just go through.
I think one by Teresa.
Okay, so let's see. Okay, so there are some about 18A. So the 18A we're not going to be tackling now, specifically 18A certificates, not in terms of this audit. Okay, I have an NPO that carried out a non-traditional religion. I'm not traditional Christian, and their activities comprise holding retreats, both short, maybe a few hours, and for longer periods, few days, which requires them to travel to the location of the NPO and stay over as it is located in a rural location, which takes some time to travel to or from main cities or towns. There's accommodation and meals provided, which they pay for. They are not hospitality or tourist industry, and they would not want to affect their PBO status by being classified as such, but the effects of COVID lockdowns that affect this industry apply to this NPO, and they cannot carry out public benefit activities. So, Teresa, I'm not too sure what the question is there. It seems to be more of a statement. I don't know if you want to just unmute and maybe just ask your question. Amanda, just to answer your question, there's just one session for today. We finished a lot earlier than expected. So it is only for today. The next one, I think, is next week. Yeah. There's one every week for the next 6 weeks. Sorry. Okay, so for UIF TARS extension. Oh, okay. So you've got okay, so if I understand this correct, we're saying that, okay, this is an organization. It's an NPO. It does travel and things where they're going out to the rural areas. But it's not hospitality. So see, it wouldn't qualify in the sense of the session of the Annexure A and Annexure B. So you wouldn't be able to get that TARS extension, unfortunately, for your organization, because the guidelines are very specific as to what industries or what areas that they're focusing on. And you aren't tourism, I mean, or you aren't hospitality. It's just that you are going out to these rural locations. So I wouldn't think it would qualify. Okay, we've got a question. Okay, so Riza's just responded to Norma Zubilo. Teresa, maybe what you can do is you could just email me separately, and then we can look at your specifics, because just to see if there's anything, any area in which you could maybe claim. Okay, I'm just seeing if there's any other questions. There's some comments. So PBOs. That's also PBOs. Okay, so there's a lot of comments about 18A, and so I would definitely recommend you all attend the session that we will be rolling out on that. That's often like one of our most, I think, where probably Ridwan gets lots of questions. So if you have a lot of queries on 18A and those activities, please join us for the next session. Okay, so yeah, if there's no more questions, then we will close off for today. But thank you very much for participating. I know we finished a little bit earlier than anticipated, but I think the next few sessions we'll probably run till the end, because there's a lot more information in those. Today's session was just aimed at what is topical at the moment. So thank you everybody for your contribution and your questions. Just remember, okay, I'm just going to put up our email addresses, which is on the slides.
Lisa, can I also just confirm the upcoming sessions as well, just so the guys know what topics are being covered over the coming weeks? Just as a reminder, I think you would have got it on email from NASCEE, but basically next week, the 26th of August, we're covering cloud accounting and technology for your NPO. So whilst obviously the focus is on accounting itself and obviously using technology, data automation, data extraction tools and things like that, but we will cover some cloud technology that could be beneficial to your organization as well, including project management tools and the like. On the 1st of September, we've got accounting and statutory compliance for NPOs. As Farida mentioned earlier on, this is the session where we will be dealing with your compliance issues, whether it's with SARS, whether it's with Department of Social Development, Department of Labor as well, your deadlines, the common non-compliances that we find amongst non-profit organizations, as well as registrations, that we find so many organizations sometimes are unaware that they should be compulsory registered for, like workmen's compensation, for instance. Then we've got the 7th of September. We go into the thick of things with all the tax subjects opening up, specifically with regard to more of the technical issues. We obviously will deal with income tax exemption and trading income and the impact of that on your PBO status as well. Trading income rules, what are the exemptions that would apply to non-profit organizations that do have trading income. So it can get quite technical. Thereafter, on the 14th of September, NPO VAT registration rules and benefits, an area which most non-profit organizations get wrong. There's a lot of misinformation with regard to VAT registration rules and the VAT benefits that are available to non-profit organizations. So we will cover that in detail on the 14th of September. And then I think the one that most people look forward to and always want to shoot down the messenger in terms of Section 18A and the rules there, that will be covered on the 21st of September, along with the other tax benefits and exemptions that your PBO status gives to you, like transfer duty, SDL, donations tax, and things like that as well. So yeah, as Farida said, I think those sessions, there's a lot more technical, there's a lot more content. So we will most definitely run, I think, the full sessions thereafter. And we look forward to having you guys then. And thank you on behalf of both Turning Point Chartered Accountants and NASCEE. We hope you enjoyed the sessions. We've obviously had to do it virtually. We normally run 2-day workshops on these sessions, but obviously due to the circumstances we find ourselves in, we've obviously decided to take it virtually. And hopefully we do get a chance to meet in person pretty soon. And don't forget about obviously the sessions that we've got as well. Make use of that. There is no charge. I know like attorneys bill per second, so there's no charge for these virtual consults and meetings that we will have as well. If it's anything specific, I think just put it on the email just to sort of briefly outline the nature of the query that you'd have as well, so we can allocate the right partner to address that for you. So just a reminder, I think that's next week, Monday and Tuesday, Farida, am I correct? That we've allocated.
Yes, Monday and Tuesday. So Monday 10 to 12, Tuesday 1:30 to 3:30. Okay. Yeah, I think thank you so much, everybody, for attending today. And we look forward to engaging with you over the next 6 weeks. And enjoy the rest of your day. And yeah, if you'll have any questions, just pop me an email or pop Riza an email as well. Thank you. And we're going to be closing off now. Bye.